Hello, hello, everyone. Welcome to Losers Become Winners for June 18, 2020, with Bank of America exiting with a minus 33.7 in 3 days. Let's go take a look at that chart. Now, this is what happened. We got stopped out here below our 30-day moving average, and even though it closed above the 30-day moving average, our order was triggered for the exit right there. And we can verify that loss by coming here to putting in the Bank of America here. And there's the chart again, and we go and reach the now. Trade was set up on the 16th of June, so we go back and set up to the 15th of June, and there it is in at 270. Clear that in at 270 minus the 179 for $91 loss. $91 loss is a 33.7 on the percentage divided by the 270 as a percentage, and our loss is the 31.7. Confirmed. $91 lost times 7 contracts. Not pretty. 7 contracts came out to $637 with an additional approximately $10 in commission fees. That's right here, and it's $647 with the carried loss of $1208. Carried loss of $1208, giving us a new loss of $1855. So we now have a new carried loss of $1855 for Bank of America. Plan B. Plan B is we crossed above the 30-day moving average. We got to do is get our histogram into the positive zone, and we'll be looking at taking in the trade and setting it up there. Now, why did this happen? Remember, there's going to be three questions you have to ask yourself every time you finish a trade, good and bad. And the rules are, what did you do correct? Well, what I did correct here was I was taking this on the price action, solely on price action, disregarding my instrument panel. And remember, instrument panels is like it's like driving your car. How would you get in your car, turn on the engine, and not be able to see the speedometer, the oil pressure, the electric uh, revolutions, the whole instrument panel, the whole instrument is totally blacked out. This is what this trade was. Now, why did I do that? I did it because I was looking at some back testing statistics that indicated that this might be a profitable way to trade. It's simple. Problem, and it showed up in the back test. You can encounter several losses in a row. We're talking 2, 3, 5, 6 losses in a row before you catch the big wave. Instrument panel reduces that number of opportunities of losses almost half, and the returns is slightly less, but you have more winning trades and a bigger return. Now, why did I do this? I did it because the reason is that I've come across a new theory. I finished back testing it, and I finished doing the paper trading. Now I apply it to real money. Does it hold up in a real live money trade? That's what's going to happen. All these trades are in the same category. So Bank of America is the first loser out of this group, and that's pretty much it. Everybody else is running behind. We'll see what happens there in the next few days. Going over now to the Tigers, and the Tigers had a similar situation. Let's go ahead and reset back our calendar, clean out the dialog box, and get over to the Tigers. And here at the Tigers, we have didn't clean out too well. At the Tigers UAA, I mentioned this yesterday that there was a strong chance that this was going to take a hit. And let's go look at that chart. And there it is, UAA. And it's the same thing, it's the same kind of trade. We were taking it off the price action in disregarding of any of the indicators down below that I usually use. And the question is, what did I do right? I follow the rules of this strategy. What did I do wrong? Nothing. I set my stop to the MA. What could I do better? Go back to the instrument panel. That question number 3 is, what could I do better? I'm just pointing out to see if this strategy works, and I'm showing it to you because you're going to come across this. There's a lot of gurus out there throwing out stuff, and I want you to become educated to say, that works, that doesn't work, I don't understand it, I understand this. You have to trade what you understand and what you can manage, and then hold on to those disciplines for the results. So where we are here, we had a 40% loss in 3 days. UAA, we'll put it up here on the top to conclude our our verification. The trade was set up on the 15th also, so we'll come down to our 15th calendar. And there it is. 219 at 131 resulted in a $88 loss, $80 loss on one contract. That's my little symbol there, means one contract. It's not in front meaning number, it means one contract. And then $2 round up for the fee cost fee, $90, 90 plus the carried loss of $12.75 for a new carried loss of a new ode of $13.65. What is plan B? Well, plan B would be to go back to the instrument panel. I'm only giving this thing, I gave this 10 trades, and the laws of probability say that if it's workable, out of 10 trades, I should come out with a profit. So right now, you can see we are behind with Bank of America and UAA out of it. So now it's 2 out of 10 down. We'll see what the rest of them can do with the rest of the field. So no new trades will be added. Correct. No new trades will be added until all these guys have come home, and then we're going to add up the numbers and see, did it work or did it not? And with that, we'll conclude today's report of losers become winners for June 18th, with Bank of America losing 33.7% in 3 days. And I thank you for shopping. My wife is waiting for me. She's the shopper, I'm the driver. So, but that's it. I'm going to say good afternoon and have a great day, and be well and be safe. Bye-bye.